Hey guys, welcome back to another video, and today I'm here to talk about a penny stock that I think has a lot of potential to blow up very soon here. Very cheap stock, very good to buy right now. I think they actually just got a very big deal with an even bigger company, over $100 billion market cap. So let's get right into it. If you guys do enjoy the video, be sure to smash that like button. It helps out a lot. Also subscribe to the channel. We're nearing 600 subscribers. So thank you guys so much. And without further ado, let's get right into it. So bad day in the portfolio today, down $400 to 24,000, but we're still up on the past 3 months. Year to date, we're up almost 50%. Can't complain, just another bad day in the market. But the stock we're here to talk about today is Fubo, ticker symbol FUBO. This is a stock that's had its ups and downs, a lot of ups this year, but then you go to the all-time chart, there's a lot of downs. It's down 55% all-time from when it IPO'd back in 2020. Relatively new stock, relatively young. We see that actually it went to $42 at one point, and then it was very volatile, went all the way down to 20, back up to 32, and then it's kind of settled down around this $1 to $4 range for this stock. I picked up a few shares here at $1. I'm still looking to dollar cost average up. Definitely don't have a lot of money in this stock, but I do want to tell you guys why I'm planning on buying more. Its PE ratio is only 15.8, which I think is insane, especially the numbers that they're yielding now. This is a $1.36 billion market cap company. And if you guys didn't know, they actually just secured a deal with Disney. Disney is buying 70% of Fubo. They had to. It was settled in court because Fubo said, oh, we're going to sue the big dogs. They're taking, all of our sports and they're making it into a monopoly. The court actually gave it to Fubo, the small company. This is a $200 billion market cap. They know what they're doing. Disney's great, very established company, been around since, the beginning of time, 1923. So yeah, Disney picking up Fubo is very good for Fubo, very bullish. But let's go into the numbers now. We see this is Fubo's earnings, over here in quarter two 2025. We see that their earnings are actually insane, how much they've grown since last quarter. So their net income from continuing operations, it went from negative 25, this is obviously in the millions, but negative 25,000 to negative 8,000. So up a lot. I mean, a percentage change wise, that's amazing. Year over year, you can't ask for any really better percentage change than that. And then all the numbers are looking like they're, it's pretty much up. And then other, income, it's up, they're in the positives now. And then what's really important to me is their net income from continuing operations is now positive. Trailing 12 months, it's now positive. It was negative 250,000. Now it's up 84,000. I mean, actually, this isn't in the millions. Fubo is so small that this is in the thousands. Wow, that's insane. But Fubo is a very small company. I mean, you see their market cap is, barely $1 billion right here. Disney buying them makes them, that much of a more backed company. They are, negative. It's insane that Disney bought them because there is potential in this company. You keep going through the financials here. You see that net cash is down, not worried about that. But I mean, just all the net cash provided by used in operating activities. This is a negative 123,000. Now we're at positive 150,000. Very impressive earnings from Fubo. This is their full balance sheet right here. They were negative 25,000. Now they're negative 8,000. There's very impressive numbers from Fubo, the way that they're growing, actually, especially in this position. And Disney buying them is very good for them. And I wanted to look at this little article too. Fubo shareholders approve a business combination with Walt Disney's company Hulu Plus and Live TV. So this is the biggest thing for them. We see that Fubo is leading sports first live TV streaming platform. They announced today in their shareholder meeting that it's been approved. Its previously announced transaction with Walt Disney Company. So this is going to go through as long as the courts approve it. They're about to file their 8-K form just to the SEC. We see they're subject to the completion of the closing the transaction announced by Fubo and Disney in January of 2025. So it's been quite some time since this was announced. Once this actually goes through, I think we're going to see an even bigger spike in the company's price. We see in the past 3 months it's up 10%, but it's been pretty stagnant. It's been pretty stagnant to say the least. But this is a stock that is easily able to run to $10. No doubt about it. This could be a $10 company. Under the terms and agreements at closing, Disney will own approximately 70% of Fubo. So Disney is going to be the majority owners of Fubo, which I like. I want them to own more Fubo than Fubo does. I think Fubo is great, but Disney knows what they're doing. Disney's not playing around. Fubo's existing management team is actually going to operate still on the newly combined Fubo and Hulu Live TV businesses. I also like to see that. And then, just a little bit more here about what they're saying with Fubo. And I like that they respect the shareholders' opinion too. It's very good when investing in a stock. This is what Fubo actually does. So they have a global mission to aggregate the best in TV. I mean, this is just yada, yada, yada. But they actually do aggregate more than 400 live sports, news, and entertainment networks, and the only live TV streaming platform with every English language Nelson rated sport channel. I'm not sure what that is, but I think that, Fubo, that the reach they're getting is very impressive, just to say the least. And then, yeah, so a lot of, mumbo jumbo down there. But I mean, Fubo is very cheap relative to where I think they're valued, relative to where I think they can go. I wanted to read this actually as well, just to show you guys where Fubo actually could go, what's actually going on with the Disney deal, because it sounds great. Oh my gosh, there's not enough ads on this site. It sounds great, just as Fubo as it is, it sounds great, but let's actually get into like what Disney is doing with them. So it's combining Hulu Live and the sports heavy Fubo TV. So they're just combining into one. Hulu Plus Live, which is already one of the leading sports providers, is combining with Fubo TV, who wasn't one of the leading sports providers, but very up there, top 10. And this is going to clear the way for the launch of Venue Sports, a streaming venture from Disney's ESPN. ESPN, also another very popular sports provider. Warner Bros. Discovery and Fox, another very popular sports provider. So Venue Sports was originally supposed to launch this fall, but was delayed by an antitrust lawsuit brought by Fubo. So now Fubo is on board because of the lawsuit. In August, a judge granted a preliminary injunction blocking the new sports streaming service, saying it could destroy competition and inflate prices for consumers. And that's why Disney said, okay, we're done. We're going to buy you out, Fubo. But they only got 70%, which is even better. Fubo's still a company. So they're going to pay $220 million to Fubo to resolve the legal dispute. And it said it will provide a $145 million term loan to Fubo in 2026. If this deal passes regulatory, blah, 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 blah. So it's probably going to pass. I mean, it already pretty much did. But once it actually does, that's going to be when the stock, I think, sees the most, jump. And then we're going to see, Venue Sports said in August that its service would cost $43 a month. $43 a month in this, economy, providing everything, NBA, MLB, NFL, and college games, significantly cheaper than a traditional cable bundle, which can cost $100 a month or more. And the fact that, ESPN is the one that's providing it, I feel very good about that. ESPN is one of the leading sports providers, and now they're just going to be Venue Sports, and they're already going to have a bunch of subscribers, and Fubo is going to get thrown into that. I don't know if people are, putting that into the stock price. Fubo is just going to go up. That's the bottom line for this video, is if you invest in Fubo, it's probably just going to go up. I mean, the numbers look amazing. Every company that they're getting combined with is looking better and better as the days go on. It looks like it's just better and better for Fubo's business. So it looks like it's just going to keep going up. I really do like to see that. And there's just more, are consumers lacking options? No. So it's just more talking about that, and will you have to pay more? No, you won't. So this is kind of more for the consumer if you're thinking about buying this, not really for the investor. But it's always good to see how they're thinking and what they're thinking about. So, I mean, as an investor, is Fubo TV a buy right now? I'd say yes. Fubo looks very attractively priced. Their PE ratio is 15, which relative to their potential, I think is, really low. I like the risk to reward ratio on Fubo, because I think that this is either a 2x your money, or, I think you're either going to 2x your money or maybe lose. Like, you can sell Fubo if it hits $3, which I don't think it's going to do. If it drops 25% in value, sell it. You lost 25%, eat the loss. It's probably fine. You're up a lot this year already if you're investing like me. But I don't think that's going to happen. I think it's probably going to double before it does that. So if you want to gain 100%, I think it's a good, great time to invest into Fubo. I'm actually going to add some shares as the market opens on Monday. Probably going to get around, maybe, 100 shares, maybe a couple hundred. Probably, depending on where the stock price is. I'm already up a good amount, but also don't have much money in it at all. So yeah, so Fubo looks great right here. And then, backed by, just again, let's check out Disney before we end this video. Just look at Disney again, $200 billion market cap, and they've been around since 1923, taking on Fubo, which has barely a $1 billion market cap. And they've been around since the year 2009. They were founded. They only went public in 2020. So, Fubo's relatively, they're basically brand new. Basically a brand new company, taking ownership by a company that's been established since companies started. I really like to see that. I think that Fubo's in the right hands, and great things are going to happen for this company in the future. So that's all I have for today's video, guys. If you did enjoy it, be sure to smash that like button. It helps me out a lot. I really appreciate it. Also, subscribe to the channel. We're about to hit 600 subscribers. Great milestone. Thank you guys so much for the support. Thank you for watching as well. We're going to have a new video out tomorrow. Catch you in the next one. Peace.